Welcome to FOMO Consulting for your daily AMC stock analysis video on Saturday, June 12th. Ladies and gentlemen, we could be looking at the mother of all gamma squeezes this upcoming week, and it is a week of reckoning, in my opinion. And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I would appreciate the support. Let's get into the video. So as always, I would like to thank each and every one of you who has liked, shared, commented, and subscribed. Means the absolute world to me. Thank you. Start with a quote by the late, great head football coach of the Arizona Cardinals, Minnesota Vikings, amongst others. They are who we thought they were, by Dennis Green. Our opponent is exactly who we think they are, who we thought they were, and who they will continue to be. As always, I have skin in the game. Great day yesterday. Made up a lot of ground from Wednesday and Thursday, obviously, and I'm sure you did as well. Overall, broader market inflation fears seem to be subsiding, at least for the short term. There is a catalyst coming up later next week. I believe PPI data comes out. But Dow was up, NASDAQ up, S&P all up on Friday. Most importantly, tech is recovering just a bit, at least on Friday. Let's look at crypto. Crypto overall mixed as of the time of this recording this morning. Overall, Bitcoin down just a little bit, Doge up just a little bit. All the popular names in the green, Litecoin, Ethereum, what have you. So overall, not a bad day. As usual on the weekends, it seems to recover and be in the green. Big catalyst for yesterday, I believe, at least from the whales, was a fundamental improvement in the AMC business model. Their credit was increased or upgraded. It just shows an improving business that we are currently supporting, and I think some of the institutional investors saw that and jumped in. German apes had a fantastic Friday, no different from us, up to $40.29, up 11.54. Well done. Enjoy your weekend, German apes. So let's look at how AMC did on Friday. I think it was exceptionally bullish. I'm sure you all were pleased, same as I. We closed at $49.40. I think that was a bit unexpected. At least it was for me to close quite that high, but I'm certainly pleased. It's $6.59 increase, 15.39%. Absolutely huge. Up after hours. Second half of the trading day was incredible. I believe the credit upgrade brought some institutional investors. We may have saw some delta hedging going into next week or at the end of the at least expiring yesterday. So overall, we'll take it. So as always, we were the most popular and certainly the most active by far, even on a lower volume day. So again, could not be more pleased. What is the most bullish thing to me is this. The after hours on a Friday. Usually we see a huge amount of sell-off. People don't want to carry positions into the weekend, a lot of uncertainty. This chart shows exceptional strength. You didn't see a lot of people taking profits. You saw the normal, right at the market close, but it recovered quite quickly. And then we consolidated even on lower volume throughout the remainder of the evening. To me, that just shows a very, very strong floor. People are holding. People are exceptionally confident going into Monday. I could not be more bullish. And usually I don't look at the after hours and pre-market too terribly much, but this just shows a really, really strong floor and a lot of confidence going into Monday. So let's look at the 1 hour chart. If you just look at the indicators where I have the yellow arrows, you certainly see the moving average is now heading back in a bullish direction by far. MACD has just started a bullish crossover yet again, and the RSI is in neutral. We have a ton of room to run next week without a doubt. I could not be more excited. So let's look at a little deeper here. So this is the 4-hour chart. Again, you see the same indicators. You see moving average now starting to move back in a bullish direction. Alligator is taking a nap. However, the green trend line is starting to cross over the blue and the red. That would mean his mouth will start opening again, and I think that is exceptionally bullish. MACD has now touched the signal line, and we are starting a bullish crossover again. RSI is certainly in neutral. I believe we have a ton of room to run. If you look over on the left, the last time the RSI was in this level of neutral, you look at what happened. We had a huge bullish run, a huge bullish push. We are beautifully set up for this upcoming week. Again, let's look at the bigger picture. Daily chart certainly shows where we have been over the last week. Again, MACD is clearly bullish. RSI back in the channel. We have a ton of room to run this upcoming week. And on the last 3 opening trading days of the week, including the Tuesday after Memorial Weekend, we averaged 16.75% on Mondays. Absolutely huge. So let's look here at the weekly chart. Again, you can see RSI isn't overbought on the weekly. Same for the MACD. We are very, very bullish, but I believe we still have a lot of room to run. This is a momentum stock, obviously. We have been clearly in a bullish direction over the last month or so. But if you look, we've been incrementally just stair-stepping our way upwards. Let's look at GME. We have to look at GME because we are tied together in many, many ways. And as GME goes, we go in a lot of ways on a daily basis. GME had itself a fantastic recovery day, and it needed it. We needed it. Congratulations to GME. This is where everything really gets interesting. So 90,000 call options expired in the money as of yesterday. Absolutely huge. Again, our average on Monday, as you can see over the last 3 weeks, has been 16%. I expect a very similar performance, but make no mistake, our opponent is going to do everything possible to keep calls out of the money next week. It could be absolutely explosive for us next week. So again, bullish sentiment on the options chain up and through yesterday. No issues there. This is what makes me just exceptionally excited. So these are the call options expiring this upcoming Friday, June 18th. We already have 414,000 call options, not including the puts, which would put us around 450, already in the money. Friday's action may have already seen a bit of delta hedging coming into this week. I do not believe after Wednesday and Thursday of this previous week, a lot of this has been delta hedged for yet. We could see absolutely explosive growth and then kind of causing the recurring feedback loop, right? We don't know. No one knows how much they've actually hedged for, but it is very clear to me they probably still have a lot more to do. If you look just at the open interest, and I filtered this by the upcoming strikes with the most open interest expiring Friday the 18th. At the $50 strike, you have 24,000, over 24,000 open interest. So another 50 cents or so, we're in the money there, right? $53, $6,055. You put another 12. You put another over 20,000 at 55, so forth and so on. So if we get to $73, that will be an additional 140,000 contracts in the money. So I took the options chain expiring this Friday, the 18th, and I sorted it by open interest, largest to smallest. That's already in there. So $40, 107,000 contracts. That is absolutely huge in and of itself. At $145, there's almost 42,000 contracts expiring in the money if we ever got that high. $15 at the strike, you have 40,000 already in money. What I have highlighted in yellow are things that are near our current price, certainly within reach, with a huge bullish push Monday and Tuesday. If you just look $73 strike, you have almost 32,000 contracts that would expire in the money. At 50, just another few cents, we would put almost 25,000, $60 over 23,000, so forth and so on. So as we incrementally climb dollar by dollar, you look just between, say, 50 and 73, we could put another 156,000 contracts in the money as of today. Obviously, this will grow, people playing weekly options and strikes, but a lot of these have been purchased over a month ago. I believe we have triple witching, which will increase the volatility, no doubt, this week. But overall, so what I want to show you now is AMC. You've got a huge call volume, 1.1 million just in total call volume on this options chain, but you have a total open interest heavier on the put side. Obviously, there's a lot of puts that are going to try to play this on the way down, which I think is, obviously hedging, right? But I think this is a bullish case for AMC over the next week or two. So let's look at GME. GME has 980,000 in open interest just on puts, and I'll show you why this is significant very shortly. GME, they have extended since last week. So expiring June 11th was $580 strike price. So they've extended that upwards, expiring this week to $680. Clearly, the smart money is expecting a huge push upwards, which I think it bodes well for us, right? So look at GameStop. You look at the open interest at the various strikes all the way to $680. Again, there has been a $100 increase week over week as far as the top level. I think that is exceptionally bullish. We run together. They're expecting something. So this is where I personally got really, really excited. So if you look, this is the option chain from bar chart for ETF IWM. It is tied heavily with AMC GME. No doubt they've been shorting it to push us both down, which is why we typically run together, as well as pairs trading. But if you look, the put open interest at 4.8 million. Total call open interest at 1.8 million. The call volume is far less than the put. So they're expecting a huge fall off. If you look at the week of 6/18, this upcoming Friday, the puts nearly triple the amount of calls. Why is that important? So let's look at IWM. So this is the options chain expiring this past Friday, 6/11. The strike price was $285. This Friday, 6/18, they've extended it to $340. That is huge for an ETF. ETFs do not run that high that fast. More importantly, this is the weekly chart going all the way back to 2010. IWM has never even crossed 285, much less 340. As you can clearly see, we are kind of at the top of the curve as we sit right now. The highest price, $234 on the weekly chart. That is extraordinary that they would place an ETF with a huge increase by nearly $60 week over week. Clearly, the smart money is expecting something big. And as you can see, AMC is tied up in 32 ETFs. The largest holding is IWM, and the largest allocation is SFYF. So feel free to look into this. This is certainly interesting data. So quick piece of news around AMC. In the Heights, the musical, is making a splashy debut amid rising box office optimism. Good article. Certainly, the business perspective is coming around. We're seeing less hit pieces from a business perspective. They are running out of FUD to produce, right? And more importantly, if you look at the top movies from 2021, Godzilla vs. Kong, 98.1 million domestically. A Quiet Place 2, 97, shortly, almost neck and neck, right? I didn't really expect that. Cruella has done quite well, Tom and Jerry, what have you. Worldwide, if you look at Godzilla versus Kong, 441 million, huge numbers. F9 is already at 256 million and has not opened in the US and Canada. Melvin Capital loses 44%. Okay. AMC rides meme stock wave to S&P optimism over capital structure. Again, people are becoming more bullish around the business model of AMC. Mudrick loses 10% on AMC trades. Okay. Are the shorts covering AMC stock? This was a good article that came out this morning. According to the latest data analyzed by Market Smith, the short interest or shares sold short by individual and professional investors is currently 0.7 times AMC's daily average volume of 149 million shares, or roughly 100 million shares. That's equivalent to 22% of the stock's entire float. A little different than Ortex, right? So if you look, overall volume yesterday, 213 million, short interest change of 0.17%. Total short shares available, 1.5 million. Nothing's really changed. The dynamics have not changed. The fundamentals have not changed. This week could be absolutely epic. So what I want to show you here is the short interest trend lines from the charts through Ortex. So if you look, obviously price action, gray bars are the borrowed share volume. The yellow bars are the failures to deliver. Obviously, there's a lag there. But if you look at the short interest trend lines, they have been going down as we supposedly believe some covering has been occurring. But, again, we don't have all the data right now. So I've kind of blocked it off, and let's go step by step. So the shares on loan and the free float on loan are the trend lines you see. Price action is obvious. Borrowed shares is the gray bars. So if you look going back through April and May, you can see where the bars obviously kept pace with the price action. They kept it suppressed. They kept it down until we actually had the big breakout a couple, 3 weeks ago, right? So now what I've done is overlaid that with the failures to deliver. You can clearly see why we stayed in such a narrow channel of 9, 10, 11, why 14 was such a key level to break out of. The FTDs certainly were being used to their advantage. We do not have any updated information as of right now, but this goes through mid-May, and you can clearly see, based on the data from Fintel readily available, even on the 7th of May, at that time, there were 3.2 million shares failed to deliver. Obviously, they've made up some ground. On the 11th, there was 3.7 million shares FTD'd, right? They've made up some ground. This is not cumulative, but it is a daily record. But I believe when the new data comes out, we will see a very similar scenario. Let's close with a quote. A winner is a dreamer that never gives up. I certainly believe our dreams are very much alive. We can have, again, the mother of all gamma squeezes this week, all the chart, the indicators, options data, things going on behind the scenes, all lead me to believe we're going to have a great week, albeit our opponent will clearly do everything possible to put contracts out money. We may see some really bloody red days. We may see some huge volatility like we did about a week ago on that Thursday after the 95% run up, where we swung literally $90 in one day, went all the way down to 30 something dollars, recovered. We could see some huge volatility. So again, buckle up. But we, in my opinion, certainly not financial advice, we are perfectly set up for a monumental week. So as always, I want to thank you for watching. I hope you found the video informative and entertaining. And if you did, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I would certainly appreciate the support. I hope you all have a great weekend and your life is full of green candles. I'll be in touch soon. Take care.